VWAP, or volume weighted average price. This indicator is mainly used by institutional brokers, in other words by big players who have a lot of cash. So if those people make their trading decisions based on this indicator, why can't we do the same? The thing is, not many traders know how to properly use this tool, and with this video I will hopefully solve this problem. I will show you exactly how to utilize VWAP like a pro for the maximum gains possible. Okay, without further ado, let's get into it. So first, let's understand what VWAP is. Let's face it, at its fundamental level, if we had to compare two seemingly good securities, more often than not we would check its price trend and the trading volume. Volume is important as we don't want to get stuck with a stock which has few takers, even if you think it's priced attractively. Thus the VWAP was created to take into account both volume as well as the price so that the potential investor would make the trading decision or not. In simple terms, the volume weighted average price is the cumulative average price with respect to the volume. I'm not going to get into much detail on how VWAP is calculated, yet the formula is quite simple. The only thing that's important to us is how we can utilize this tool. Before we get into it, there are a few things we need to understand about VWAP. First, the line will remain the same on all intraday timeframes. If you switch the chart from 5 minutes to 1 hour, the VWAP will stay at the same price. This might be good as everyone who's trading sees the VWAP at the same price. Second, the VWAP only works on intraday timeframes. It simply does not work on a daily chart. Third, if the price action is below the VWAP line, the stock is considered in a downtrend. Exactly opposite is true if the stock is trading above the VWAP. Fourth, the VWAP line can serve us as a support and resistance line. In terms of a trader execution strategy, VWAP is also used by institutional buyers who need to buy or sell a large amount of shares but do not want to cause a spike in the volume as it attracts attention and affects the price. To explain it further, let's say an institution is interested in buying 10,000 shares of Tesla. If it puts an order of 10,000, the immediate action would be a spike in the price as the exchange fills the order. Now, if other traders know that there is a big demand for the share, they will try to buy the share at a higher price than the bid price of the institution and sell it back at a higher price, effectively increasing the ask price of the share. To avoid this scenario, these institutions develop an automatic trading strategy to divide the number of shares into smaller amounts and bid for the shares in such a way that their trades do not let the closing prices go far from the VWAP. Since VWAP acts as a guideline on which certain traders base their trading decisions on, it helps to keep the closing price as close to the VWAP as possible. Among intraday traders, the VWAP indicator can be used in a trading strategy too. A lot of traders would use the VWAP in a way so that whenever the price action crosses and closes the line, this is considered as a new signal. But as I mentioned previously, certain institutional traders would try to execute trades in such a way so that the closing price does not go further than the VWAP. This can influence other traders who would look at the closing price and take a trading decision thinking that the closing price is bound to get closer to the VWAP eventually. Hence, when the closing price starts moving up and further from the VWAP, there is a pressure among the traders to sell due to the logic that the other would sell at any time. Similarly, when the closing price starts moving down and further from the VWAP, there is a belief that the stock is undervalued and there is a pressure among traders to buy the stock. In this way, we can call VWAP as self-fulfilling. Of course, depending on the mindset of the community, there can be different scenarios and thus one cannot depend on VWAP alone to make a trading decision. Here is an example where the price bounced off the VWAP line several times before this big move happened. Here is another example. We see the price found a support at the VWAP, it bounced off quite a few times, and then a massive increase in price happened. The same thing here, the price gets closer to the VWAP and then it bounces off. And this happens over and over again. Obviously, we cannot be using this indicator on its own because it issues quite few false signals. So in order to eliminate them, we need to add an indicator called EMA. And its length will be set at 200. And what this indicator basically does, it acts as a stronger level of support. And similarly to the VWAP, if the price action is above the moving average, the stock is considered in an uptrend. And if the price action is below the EMA, the price is considered in a downtrend. It will basically keep you away from being in the opposite direction of a long-term trend. For example, you wouldn't have taken a long position right here, even though the price just crossed and closed above the VWAP. This way we give ourselves really high chances of success. Obviously, there are some mistakes you should avoid. For example, if the price action just closed below the VWAP, it doesn't necessarily mean that the shorter term trend is changing. So the support and resistance levels are not exactly at the VWAP line. That's why you need to add another good confirmation indicator to the chart to find better entries. For example, let's use absolute strength histogram. And based on its signals, we can place buy or sell orders. And the rules are very simple. When the histogram changes from blue to red, this is a signal to go short. And exactly opposite is true for taking long positions. And for this signal to be valid, we need to have the price action closed below the VWAP and below the 200 EMA. We see these short signals wouldn't be valid. Exactly opposite would be true for long positions. For example, the ASH issued a signal to buy, the price action is closed above the VWAP and the 200 EMA, so this long signal would be valid. You can set your stop loss at the recent swing low or at the VWAP line. And you can close a winning trade as soon as you have the price action closed below the VWAP. This way you give yourself a chance to catch a massive chunk of this ongoing trend. Also take a look at this example. We see the risk reward can get up to 3.5 to 1. This strategy works perfectly well in a trending market and it can make you a lot of money. You can also use a fixed risk-reward ratio. For example, let's use 1 to 1.5. I think this method works even better as you get in more winning trades. If you prefer trading with support and resistance, you can use a different indicator. We see this indicator consists of the blue lines, which are the support levels, and the red lines, which are the resistance levels. And with its help, you can find the times when the price makes a breakout. And to enter a long position, the price action obviously has to be above the VWAP and the EMA. We see in these two cases, all the rules were met. This strategy also works pretty well, however, I highly recommend you to do your own backtesting. So in conclusion, I would say this: VWAP is a really good technical indicator and it can be extremely useful even for beginners. The only thing I'd like to mention is that this indicator is mainly designed for trading stocks. Okay traders, I hope you found this video useful. Don't forget to smash the like button, it really helps with the channel. And if you want to see more content like this in the future, then feel free to subscribe to TradeIQ.